Can you really just use business credit and not worry about personal credit or personal guarantees? Let's dive into the truth about how personal credit and business credit work together. I'm Gerri Detweiler, education consultant to NAV. NAV believes every small business owner deserves the chance to succeed. Every year, the Federal Reserve surveys small business owners across the country. And in 2020, they asked this question. They said, when you got financing for your business, did you use personal credit, business credit, or both? And in that survey, 12% of small business owners said, I only used business credit. 40% said, I only used personal credit. And 48% said, I used both. So both are important. Now, you're probably thinking, I've heard on the internet that I should only be using business credit. Yes, business credit can open up more opportunities for your business. You may get better terms with vendors. You may get better loan opportunities and larger lines of credit if you have good business credit. You may even be in a better position to get lucrative contracts and business partnerships. But it's not the only thing you want to focus on. Now, if you're not sure how business credit works or how to build business credit, don't worry, we'll give you some great resources for that at the end. Here's the catch. A lot of small business lenders do like to check personal credit or ask for personal guarantees. So when it comes to personal credit checks, they often do a soft credit check to sort of screen the application. So that's where you express interest and they're checking whether you're likely to qualify. The soft credit check doesn't affect your credit scores. Now, if you decide to apply for the financing that they offer, then there may or may not be a hard credit check, and that could affect your personal credit scores by a few points, but it's usually not a lot, and it's usually pretty short-lived in terms of the impact. Now, when you do give a personal guarantee, you agree to be personally responsible if the business doesn't pay back the debt. So your own personal income, your personal assets, those kinds of things are helping to pledge the guarantee for the loan. Why do lenders care about personal credit so much when it comes to a business loan? Well, there are a couple of reasons. One is that a lot of businesses, even some established businesses, don't have much of a business credit history. So if there's not much of a business credit history, the lender may want to review personal credit just to get a sense of how that individual tends to pay their bills. The other reason is that some lenders want extra assurance that the business will pay back the debt, and if they don't, that there will be something they can go after if the business fails. And a personal guarantee can offer that extra security for the lender. Now, these are very common, especially for smaller businesses and newer businesses. And by smaller businesses, I'm talking about those with, say, less than 100 employees or at least $1 million or $2 million in annual revenue. But again, even some established businesses may have to agree to a personal credit check or a personal guarantee. And a couple of great examples are bank small business loans. Banks love personal credit checks. They love personal guarantees. And the same with a lot of the SBA guaranteed loans. A lot of those require a personal credit check of all the major owners of the business. Now, there are some types of financing that don't require a personal credit check or maybe don't require a personal guarantee. And so there are some examples I'll give you where you might be able to avoid them, or at least the lender or financing company might have more flexibility in terms of credit scores. So those can include certain online loans, revenue-based financing like cash advances or invoice factoring, some business credit or charge cards, though most do check personal credit. Then a lot of suppliers don't check personal credit, and crowdfunding rarely ever checks credit. The bottom line here for you as a business owner is that you'll have the most options if you build strong personal credit and strong business credit. And then other factors like how long you've been in business and how much money your business is bringing in terms of income or revenue are also helpful for expanding your options. But the good news is you can build business credit and personal credit at the same time. And if you're not sure how to do that, check out the guide and checklist we'll list below. And by the way, the easiest way to track both your business and personal credit at the same time is to use NAV Credit Health. You can see where you stand for free, or you can get deeper details with a NAV Prime membership. If you have questions about your personal credit for your business, leave them in the comments below. And be sure to like and subscribe for more business building advice.